Welcome back to Investing Talk Podcast.
Today we're looking at Qualigen Therapeutics. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. For Qualigen Therapeutics, the volatility has been extreme, really. For anyone watching this stock recently, the ride has been absolutely wild.
Yeah, definitely seeing that on the charts.
And it all comes down to this dramatic strategic pivot that happened very recently, back in October 2025.
Okay, dramatic pivot sounds like an understatement sometimes. What exactly happened here?
Well, when we say dramatic pivot, we really need to underscore just how radical this transformation was. This company essentially transitioned like overnight from being a clinical stage biopharma company.
Right, focused on things like QN302 for pancreatic cancer.
Exactly that.
Yeah.
From that to becoming a Web3 and crypto-focused business.
Yeah.
They've even got a new brand for it, CXC10.
Wow. Okay. That's not just a pivot. That's a whole different universe. It's like switching from, I don't know, brain surgery to rocket science, like you said.
Pretty much. And what's fascinating here is that the urgency and the sheer scale of this shift, it immediately tells you something was, well, fundamentally broken with the old model.
Had to be, right. So what actually sparked this? What was the catalyst that fueled the change and all this volatility?
Okay, let's unpack this because it is a wild shift, and it was tied directly to a massive financing round.
Oh, okay. Money talks.
It certainly does here. The catalyst was a major $41 million financing event. It was structured as a PIPE deal, a private investment in public equity.
So not just selling shares openly, this was strategic.
Very strategic. And the major player here was Faraday Future.
Faraday Future. Interesting. What was their role?
Well, they led the PIPE. And by injecting that $41 million, Faraday Future now holds a dominant 55% stake in the company.
55%. Okay, that's control.
Exactly. That level of investment, and crucially, that level of control, it gave them the immediate power, the mandate really, to execute this whole transformation.
Which brings up a key question, doesn't it? Was Faraday Future actually buying into a crypto opportunity here? Or were they maybe just acquiring a public shell company on the cheap to do something else?
That's the critical skepticism you have to apply here, absolutely.
Right.
But look, whatever their ultimate motive might be, they immediately changed the operational strategy. The company partnered up with BitGo.
BitGo, okay, that's a big name in institutional crypto custody. That lends some credibility, maybe.
It signals serious intent, yeah. Not just some small-scale retail crypto dabbling. And this partnership resulted in the immediate allocation of about $30 million of that new capital straight into a crypto treasury.
$30 million? How did they deploy that?
Into the top 10 cryptocurrencies.
Okay, so the big names.
Right. That strategy, using the top 10, using institutional custody with BitGo, it suggests they're initially going for more of a passive management, maybe a HODL treasury strategy. Rather than, say, trying to immediately become an active crypto developer or a DeFi leader, it looks like an asset management play, at least to start.
And the market reacted how?
Oh, massively.
Yeah.
That announcement alone was enough to trigger a huge surge. We saw intraday spikes somewhere between plus 60% to plus 70% right when the news hit.
Incredible volatility. And you can't make a move that radical without shaking up the leadership. Right?
You absolutely can't. They didn't just announce a new mission. They basically wiped the slate clean.
Meaning?
Well, the business model change wasn't just paper talk. It was backed by sweeping changes to the executive team, the board, even their auditor, all happening in early October. They replaced the previous leadership, who you'd assume were experts in oncology, phase I trials, that sort of thing, with new leaders who are presumably expected to navigate this highly complex world of digital assets and Web3.
That swap of expertise, that feels like maybe the single biggest execution risk here.
It has to be.
I mean, a clean slate sounds good. It can imply getting rid of problems. But is it possible they just replaced biopharma experts with, well, crypto novices? That lack of proven operational depth in the new field, that's something investors have got to weigh really heavily.
You do, but that just brings us back to the core question. Why? Why the desperation? Why abandon years of expensive, time-consuming scientific R&D for what looks like a high-risk, high-velocity crypto gamble?
The answer must be in the financials beforehand.
Rango. That's where the story gets a bit darker. This whole pivot feels like it was driven by financial necessity because before October 2025, the company was, well, it was financially vaporizing.
Vaporizing is a strong word. The numbers back that up.
They really do. Before the pivot, they were under extreme financial pressure. Continued net losses, minimal revenue. It raised serious doubts about their ability to just keep the lights on.
Let alone fund those incredibly long timelines for drug development.
Exactly. The most recent trailing 12-month net income, the TTM number, was a loss of about $7 million. Minus $7.01 million, to be precise.
Okay, and compare that loss to their market cap at the time.
Which was modest, around $3.1 million. So you see the problem. They weren't just running low on gas. They were potentially facing, liquidation or needing another massive dilutive capital raise just to survive.
And their size reflected that struggle too, I imagine.
Oh, yeah. Squarely in microcap territory. Market cap $3.1 million, enterprise value around $6.4 million. This is the kind of size where any rumor, good or bad, could just send the stock flying or crashing.
But then came the $41 million from Faraday Future and others. That must have completely changed the liquidity picture overnight.
It did. It moved them away from needing external funding immediately. They secured a cash cushion, a runway, to actually try and pull off this transformation.
Okay, so the runway improved significantly, but at what cost? You mentioned dilution earlier.
Yes, and that runway came at an absolutely extraordinary cost for anyone who held the stock before this deal. The sources show they completed a massive share issuance. It increased the shares outstanding by, get this, 806% year over year.
806%. Wow, let's just pause on that number for a second.
Yeah.
That is just monumental dilution. For every one share a long-term holder owned, their stake was essentially sliced into 9 pieces.
It tells you the price management, or maybe the new controlling shareholder, was willing to pay to survive and get the funding for this CXC10 crypto pivot.
Okay, so while we can't ignore that massive dilution cost, the market, at least initially, seems to believe the future potential outweighs that past risk.
Seems that way, judging by the price action.
So let's pivot ourselves now and look at the bull case. Given this new reality, why should someone consider buying this stock now?
Well, right now, the immediate thesis is just pure momentum.
Riding the waves.
Exactly. The stock surged, what was it, roughly 70.82% after the crypto news broke?
Yeah.
And that momentum is backed by really high trading volume, 6.6 million shares traded, which is way, way above its average. For short-term traders, that kind of volume, paired with such a massive narrative shift,
Right.
well, that is the thesis. They're just riding the wave.
Okay, momentum play. What about analyst forecasts? Are they buying into this?
Well, yes and no. And we have to put the brightest possible warning label here. There's an unofficial analyst consensus out there forecasting a 30-day price target average of
$24.48.
Wait, $24.48 from where it is now. That implies what? A 573% upside?
Yep, a whopping plus 573% upside. It's an astronomical figure for any stock, let alone a microcap, in the middle of this kind of unprecedented transition.
Okay, hold up. This is where we really need to serve you, the listener. What's the catch with that target?
The crucial caveat, and it's explicitly noted in the sources, is that these lofty forecasts are not coming from major Wall Street brokerages. That $24 price target, it looks like pure speculation. It seems primarily fueled by retail enthusiasm, social media buzz, which tells you a lot about who's trading the stock right now.
So it's mostly a narrative trade fueled by retail hope and momentum, not big institutional conviction based on fundamentals.
That seems fair to say at this point. Okay, let's try to look beyond the short-term hype then. Is there any actual strategic advantage to this weird hybrid model? Keeping a foot in biopharma while jumping into crypto.
It does create a truly unique competitive differentiator, if management can execute. That's the big if. See, they didn't completely ditch the legacy business, that oncology optionality, the phase I drug QN302. It's apparently still in the pipeline. So this blending of a high-risk, high-reward biotech pipeline with digital asset management, it's definitely a bold, differentiated move.
Is that phase I asset really still an asset, though? Or is it maybe just, a liability they keep around, perhaps to maintain your listing requirements or something, while the real game is now crypto?
That's a fair question. It probably functions as both, depending on your perspective.
Okay.
For the bulls, the optionality allows them to argue that, hey, if QN302 somehow, against the odds, succeeds down the line, the market gets exposure to 2 potential exponential growth sectors in one stock.
The dream scenario.
Right. But the more immediate financial goal of the CXC10 crypto division is likely different. It's probably intended to generate non-dilutive income, or at least stabilize the balance sheet much faster than the decade-plus timelines needed for drug approval.
Okay, that makes sense. Let's connect this to the near term. What are the concrete catalysts? What should investors be watching over the next, say, 3 months to see if this pivot is actually gaining traction? We need dates, milestones.
Okay, number one, first and foremost, is the Q3 earnings release. It's scheduled for November 13th, 2025.
Got it. First report since the big change.
Exactly. Investors won't just look at the losses. They'll be scrutinizing that report for details on the new cash burn rate. And critically, any initial guidance on how they're executing that crypto treasury strategy. The market needs proof points, tangible evidence.
Proof points. Makes sense. What else?
Beyond earnings, you've got the imminent rollout and execution milestones of the new CXC10 platform itself. Are they actually launching products? Are they securing new partnerships beyond BitGo? Any news about tangible operational progress in this new crypto vertical will likely drive volume and maybe build some confidence.
Okay. Progress on the platform. Anything else?
And finally, there's that lingering speculation about a potential full takeover.
Because Faraday Future already has 55%.
Precisely. The rumor mill is constantly grinding. Will Faraday Future pursue a full acquisition? Or maybe the company itself will make more crypto sector acquisitions to rapidly build out that CXC10 business. Any M&A activity would be a major catalyst.
Okay, so earnings, platform progress, M&A speculation, that lays out the bullish path of potential upside drivers. But this brings us squarely back to the bear case. This is a spectacular story, a transformation tale. But spectacular stories often end in, well, spectacular failures. Is this actually investable right now?
Look, the primary risk here is pretty simple, and it's huge. Execution. We are talking about trying to operate in two highly specialized, highly regulated sectors, simultaneously biopharma development and institutional digital asset management, both the new crypto business and whatever is left of the legacy drug pipeline. They remain commercially unproven. The entire future trajectory of this company hinges on management delivering on an incredibly complex, aggressive, and frankly unprecedented strategy.
And doing it with a leadership team that's only been in place for, what, a few weeks?
Exactly. The execution risk is immense.
And does the ownership data reflect that risk? Who actually owns the stock besides Faraday Future?
Well, the ownership data definitely tells a skeptical story so far. Institutional and insider ownership is strikingly low.
How low?
Insider ownership stands at a meager 0.03%.
0.03%. Practically nothing.
Almost nothing. And institutional ownership is only 3.24%.
Okay, so the big institutions, the supposedly smart money, they're not really involved yet.
That signals very limited institutional confidence at this stage.
Yeah.
They are clearly on the sidelines waiting for proof. Proof that this team, which presumably came from biopharma or finance related to Faraday, can successfully manage a $30 million crypto treasury, let alone build out a whole Web3 platform.
So the enthusiasm we saw, the volume, that's mostly retail.
It seems that way. Retail enthusiasm is high post-announcement, sure. But that kind of retail-driven volume and enthusiasm is exactly what contributes to the massive volatility, making it inherently very risky.
So it raises an important question for anyone looking at this. What exactly are you buying when you buy this stock today? It feels like you're buying a double dose of risk.
That's a great way to put it.
Oh.
You are buying a double risk profile. You still face that high binary risk that comes with any phase I biotech asset. It either succeeds spectacularly or fails entirely. There's rarely an in-between.
Right.
And now that's combined with increased exposure to highly volatile crypto price swings and significant regulatory uncertainty swirling around the digital asset space.
So they haven't really reduced their overall risk profile.
Arguably, no. They've swapped one set of existential risks for perhaps a different, arguably more volatile, hybrid set of risks.
And blending those two specific risks, pharma regulation and crypto regulation, that must create unique potential headaches.
Absolutely. Regulatory oversight in pharma is intense, it's well established but complex. Mixing that with the current, rapidly evolving and often unclear crypto regulatory environment globally, it feels like a recipe for potential legal and compliance nightmares that could just paralyze the new management team.
Yeah, the sheer complexity seems like the biggest hurdle for the bears. The execution needed to properly run a clinical trial and simultaneously build a compliant, successful Web3 business. It's almost impossible to imagine that succeeding smoothly overnight.
It really strains credulity for many observers.
So let's try to wrap this up. What does this all mean for the investment thesis here? How should people think about Qualigen Therapeutics right now?
Ultimately, look, this is a high-risk, high-reward, microcap story. There's no way around that. And investor sentiment is extremely bifurcated, split right down the middle. The bulls see potential disruption. They see maybe capital stability coming from the digital assets, and they see that huge, albeit speculative, potential upside.
Okay.
The bears, on the other hand, fundamentally question the sustainability. They question the execution capability. Can a biopharma company really just become a financial technology player overnight? It's a huge leap.
Absolutely. And maybe that's the tension we have to leave you, the listener, with.
I think so. The core question isn't really whether the company is currently undervalued, because let's be honest, the financials pre-pivot were terrible. The real question is whether the market is correctly pricing the chance, the probability, that this pharma company can successfully reinvent itself as a financial technology player practically overnight. It requires a monumental leap of faith. Faith in management's ability to operate successfully simultaneously into incredibly specialized and challenging sectors. It really feels like a binary bet on their ability to pull off something close to impossible.